All right, guys, let's go ahead and get right into it. We're gonna go. We're gonna do the live stream. So, I don't have a whole lot of time this morning, so give me an audio check. I've got probably half an hour, maybe 45 minutes if I'm lucky. I do have to run out. I got a flight to catch here. And I will be, I'm probably not going to put out a video on Monday, but I will be in there commenting and everything to the private group. And I will be back on Tuesday with the videos. Give me an audio check and I'll get right into it. I'll give you guys a brief kind of review where we left off on Friday, or at least where I think we left off. And then I'll get into your guys' stock picks. Try to keep your picks to 1 or 2 so that I can get to everybody that, that wants me to review a chart. And we'll get into it. Okay. Sounds good. So here's the NASDAQ futures. This is kind of what I'm thinking where we left off on Friday. I mean, in general, last week, very whippy week. If you're a day trader, yeah, you made a killing. If you're, I don't advocate for day trading. I don't really try to teach it. I do some day trading, but I can't put out videos on day trading, and I don't even want to try. And then again, I don't want to have like some light or some like chat room where I think a lot of the day trading stuff you see on YouTube is just kind of scammy, and I'm just not really into that. So really trying to give you guys, help you have some patience around trades, help you read the technicals, kind of teach you to stick with the trade as long as the technicals are sound. Position sizing is a key part of that. Having a correct position size for your, for your risk tolerance, 2, for your emotional, just standing and how you deal with emotions. And then, that. So that's always important, because if you're too heavy in a position and it's just going against you, you can't stick to the trade. That's just something you would learn. If you haven't been trading for a long time, you'll learn that through losses. Believe me, I've learned that myself through losses. Position sizing is key. And so that's what I saw last week is we've got, look, crash, down move. These are, pretty good sized moves. I mean, on the futures, that's, they're about 1.5% move. So obviously there was a lot of money to be made day trading, but, you're down, then you're up, all right, down, up, all right, kind of halfway back up, down, up, halfway back up. Okay, so that's it. We're trading within the range, and I just don't see any change in the technical picture here. Someone mentioned that we're knocking on the top end. Yeah, that's true. You're definitely knocking on the top end of the range, and maybe we break out. I can't say without a doubt we're not going to break out. There's no guarantees this trade is going to work. All right. I just can't guarantee that. But at the same time, I would say equally we're knocking on the bottom. All right. So from my perspective, there's just no technical change, and you can see that's the hourly chart here. When I go to the daily on the futures, again, what we have working in our favor, which doesn't necessarily mean that we're going to just sell off right now, but we do have that negative divergence. We've got all right, so what was I looking for really in the last couple weeks? I was looking for that bearish PPO crossover. I kept talking about it last week. All right, let's keep an eye out for that. Well, there it is. All right, we got that now. So these are things that I look for to help confirm that this bearish trade has a high probability of working out. All right, no guarantees. There's never going to be 100% guarantee, but the probability has been increased, I think, at this point that this trade is going to work out. So that's it. Now, what I'd really like to see, whether we get it or not, would be some sort of like a sell-off and a gap down. I want to get down in this range, somewhere down here, really clearly taking out the lows right here, and maybe even open up the market down there. Okay, just trap. All right, that's really what we're looking for. That's the best kind of situation, is to trap the bulls and not give them an opportunity to get out of their trade. Okay, so you gap down and then, maybe just continue to sell off, something like that. That's the best when you see that, because it traps the longs, and then they become panic sellers. Essentially, they want at first, what they'll do, and I'll just give you guys the psychology, because this is just how people work basically. At first, the smart bull or the smart bulls, maybe institutions, things like that, they'll just exit. They'll just take their loss and exit. Small loss, keep it small, exit, move on, fight another battle. The dumb money, or a lot of the retail people, they kind of hope, they turn to hope. Okay, I'm down, I want to get my money back. So they look for opportunities to get their money back. And as long as the market doesn't give them that opportunity, then the pressure builds and builds until they become panic sellers, and they'll exit as you start to get down in here. The losses mount and they can't handle it, and they become sellers, and that's fuel for the downside move. One thing that if we're going to get a big downside move, like I think we're going to, I need to have a lot of people bullish. Okay, that's a condition that you really do need, because those bulls are the sellers. That's the fuel for the downside move. I can't have everybody bearish and then get a downside move. It's typically not going to be a sustained downside move. If you have a bunch of people bearish and you start moving down, shorts cover, they take profit, and that creates buying pressure, and that's the end of the downside move. No, what I need is a lot of people bullish, and clearly on my channel, at least, I've noticed there's a lot of bulls, all right? There's a lot of people doubting the bearish trade, and that's okay. I mean, I understand that, this price action last week is frustrating because you want your money, and I get it. But the thing is that you got to have patience. If the technicals haven't changed, I just stick with the trade until it becomes a loser, basically. And that's just how you have to trade, all right? Because there's no change or reason that I should exit the trade. If I was going to exit the trade on every single daily move down last week, I would have got out, or I would have got out here, I guess. You would have looked at it like, I probably would have got out right in here. Okay, then the next couple days, it would have sold off. I've been frustrated. Oh, it is going to crash. I would have gotten short again, all right? And then they do this. It would have been a nightmare, okay? So rather than that, I haven't really lost any money, and we're just kind of waiting for this to work out. So that's the best I can do on that front. If you're day trading, yeah, then you can play these moves, and if you know what you're doing, sure. But otherwise, I'm not really trying to teach that. I'm really trying to teach swing trading and kind of, trend trading, position sizing, and all that. One thing, now, whether this remains to hold, I did say that I think we're at the top of the market. I said that right about here on the 31st. That's in the video I put out. I put the headline out that I think we're at the top or near the top. I never am going to say this is the top to the penny. Sometimes it will look very convincing that you're at the top, the complete top, but I figured that the upside is limited. I still think that's the case. And looking at it, from that video, the market is down. This is down about 1%. So over 2 weeks worth of time, maybe even a little bit longer. Yeah, 2 weeks worth of time there. As bullish and everything that last week with the choppiness and this and that, we're still down 1%. Whether that holds, I don't know. But as of right now, I have the technicals in my favor. I like what I'm seeing. Let's go to the fangs here. And again, I just want to highlight these tech stocks because that's basically where the strength in the market has been. So if the market in general, if the strength fades, which has pretty much been tech, then the SPY is going to follow. That's really how I feel. So there's Amazon. Look, nothing's changed. We're just sitting there at that resistance. That island reversal still holds as the top. Now, yeah, we're not going down yet, but we're done going up, at least for now. So keep an eye on that. Google, that one's been a little stronger than the others for sure. And this is the one I don't have any crossover yet on. So you'll see here, no bearish PPO crossover quite yet. Maybe we get it next week. It should come, but we don't have it yet on that one. Amazon, going back, we do have it right there. All right. Is it going to be a whipsaw? I don't know. Maybe, but we'll watch that. We still have that. And then Apple, there's your bearish PPO crossover there. Right there at resistance, rolling out, guys. Look, this is the downtrend. We're in a bear market. Nothing says that we're not in a bear market. The bear market started back in January of 2022. Every single opportunity, at least when this trend line's clearly established, all right? Every time you shorted, if you were to short at this trend line, Apple followed by big sell-offs. Now, the trend line wasn't really established here, but this was kind of the first drop, 14%. And this was the second tag. You didn't really have a trend line there, but followed by a 30% drop. All right, third tag followed by a 29% drop. Fourth tag. So far, you know, little drop and they're back at it. All right. We got a 4% drop, but we're not above it. All right. So what do you want me to do? You know, do I want to be a bull? Did it pay to be a bull in the past? That's all we can do is go off of, we have the technicals in our favor now. We know what the past was like when we hit this trend line. Did it pay to be a bull there? And, you know, no, it didn't. So again, I'm looking for that downside. This is the biggest player in the market, the biggest thing I want to look for. Next, we've got the bearish PPO crossover. So next, I need this trend line to break. 1, 2, 3, 4. You get the break of that trend line, it's lights out. All right, that's kind of how I'm viewing it. Now, do they pop this trend line? That's the question that we have to kind of ask ourselves. Okay, it is possible, and I think at face value, if you see them break the trend line, I'm going to have to take that as bullish for sure. What I would do, I guess here's how I'm going to probably view it. If they break out to the upside, you will still have negative divergence. It has a high probability of failing, but I think what I would probably do, just to let you guys know, is I'd probably cover my short trade. If they break out above this trend line, probably going to cover my short trade and wait for the next sell signal. Because I have the negative divergence and it's here, I think that a breakout would likely fail. But what I would likely do is probably cover, take the loss, and then wait for that failure to jump back in. And what that would look like is break out and then ultimately break this trend line right here and give you the sell signal, boom, and fail. I'd reshort right there, all right? If you break out and then fail, that's a big bull trap, and I just reshort there. You know, take a small loss, get back in, and then we'll catch the move. So that's kind of how I'm looking to play it, just to give you guys the heads up on, the upside scenario and the downside scenario. I'm not going to take a breakout of this trend line as a bullish. I mean, it is bullish by price, but you have negative divergence, and these have a high probability of failing. So breakouts that have that will likely fail. They almost always do. They don't always fail, but higher, 80% of the time they do. So, yeah, that's it. That's my thoughts, guys. I don't know if we break out to the upside and do some sort of a fake out move, or if we just break down. I don't think we're going to take out this high here, right here. That's your former high. I really don't think we would take that out. And if we do take that out and you get a daily close above that, it's just nothing but bullish. And at that point, we need to, look for continuation of or a start of a new bull market, I guess, and depending on how triple Qs looks, of course. That's my upside scenario. Here's Meta, kind of, just grinding around last week, but negative divergence, bearish rising wedge. All right, there's some resistance right in here, and then there's a gap there as well. So lots of resistance overhead. This one's not a major player as much as it used to be, but Microsoft for sure is. There's the bearish PPO crossover. If you roll back and look at these bearish PPO crossovers. All right, last time we had one was right here. There's one. All right, and the stock fell. All right, the stock fell 6-7%. All right, then you had one right here. I'm just kind of giving you guys a way to, kind of put your emotions in the back drawer and just rely on the charts and the technicals. This one, when you had the crossover, fell 13-14%. And the crossovers you would look for are not like little when you're down low and you look for a cross. That's not what you're looking for. You're looking for when you kind of have a nice rally and then you cross. All right, nice rally and then you cross. Those are the ones that are important. The rest of them, when you're kind of like down low or in the middle of the range, are just those are just whipsaws, and just they don't make a lot of sense. Here's one right here. All right, boom, there's a crossover and followed by 22%. All right, these are all not what you're looking for. There's one right there, and from that crossover, depending on how you want to measure it, but a big drop there. And there's one right there. That was the all-time high. So that's what we're looking for. And sure enough, we had a crossover here and we have another one here, or way up here. Again, you go back and look at the past, every single crossover when you have the PPO way up and extended like this, has been followed by a 10 to 20% drop, maybe even more. And I don't see any difference in this. All right, so that's that. And again, a lot of the price action last week, I think, looks like distribution. Looks like you spike up, you spike down. Institutions are using this as an opportunity to offload their tech profits for the next move down. That's what I'm assuming. Oh, we covered Google already. Okay, that's that, guys. And all right, I'm going to get into your charts because, again, I don't have a ton of time. So it's my analysis, Baba. Okay, on Baba, let me take a look. Looks like you're about to get a bearish crossover here. Don't have it yet. And you don't really have negative divergence. Yeah. So this isn't that bearish of a chart. Not anything I would feel really comfortable shorting. There is this potential trend line I marked last week. Looks like it broke, so I don't think that's a very good trend line anymore. I don't know. I mean, on this one, honestly, it just looks like it's chopping sideways. I don't see much here, to be honest, to tell me to go long or short, so I would probably just pass. LW. This is a defensive stock. You've got a bullish trend. Yeah, you're starting to wedge out. Bullish trend. You know, this is a divergent high right here. All right, from your former high. It's not confirmed yet, so look for that confirmation. But in general, you can see the RSI is starting to turn down. Usually the RSI will go first and then the PPO. So you're starting to get that confirmation on the RSI of the negative divergence. Now, negative divergence doesn't tell you to just short necessarily for an individual stock especially. You want to look for a sell signal, and that would be a break of this trend line. Okay, so that's it. Wait for the break, and then that's it. SMH, that's semis. So I did actually jump into SMH. I did a little day trade on SOXX, and then when I tried to re-short it, my brokerage didn't have any shares to short on that one. So I just flipped over to SMH. That's basically the same thing. At trendline support, guys. All right, there it is. No change. It's at support. So, I mean, does it bounce next week? Until this support is broken, yeah, it could definitely do that. We have negative divergence, so this trend line has a very high probability of breaking. But does it do this and then break? I don't know. All right, I can't tell you guys that. So if you want to wait for the break, fine. That's the most conservative method. I'm seeing a lot of things at resistance, and I think what's likely going to happen is we're going to gap down. All right, and the market will deny you an objective short entry. That's what it likes to do. It wants to trap the bulls and deny the shorts an objective entry. So sometimes you got to take on a little risk and step in early. That's what I'm doing, at least, and I'm okay. I'm comfortable with it. So far, the trade's going fine. I look at my semiconductors like NVDA, NVIDIA. All right, we broke our trend. We broke bullish trend. All right, we've got negative divergence. I like that. You look at last week, and I mean, where have we gone? We've gone nowhere. We're basically flat since we got that sell signal. So they can tread water for a little bit. I look at this as that, like, I've heard people talk about that Looney Tunes thing where the coyote runs off the cliff, and that's what it looks like to me. We're running off the cliff, float for a little bit, and then down we go. Okay, so that's fine. And then like AVGO, I mean, look at that. All right, the sell signal or an objective entry to short was right there on the back test of the trend line, right there. Breakdown, back test. You can short there on the break or on a back test. Those are your two objective entries, okay? And where have we gone for, what, over a month? nowhere. My trade is actually profitable. I think it's profitable by about 2 or 3%. From here, yeah, that's about 3%, but mine's about 3% because I didn't top take it right there. I got in a little bit off, but it's a profitable trade, and we've had a month where everybody thinks everything's extremely bullish, and yet a major semiconductor is a profitable short. All right, that tells me something. So again, that's the semis. Silver and gold futures. Yeah, you know. All right, let me look at these. GDX was, we've got, the thing I really, it's just not my favorite chart to really try to, you know, like I can't say that we have a definitive break. I mean, maybe you have that. Grab it from the bottom there. Okay, so I think that's a break. I know silver looked like a break of trend. And let me see how that kind of closed, because I know they were in there trying to hold it up. That's how silver looks to me. There's your hourly chart, but you know, it goes back several days. Negative divergence, and that looks like a sell signal to me, kind of a bear flag out and then continue down. I got some support right here about 24.74, and if I measure the target, which we'll probably just go with that one. See that? If we're going to continue to break down, it puts your major target down there at about 24.75-ish. That's where I think it's going. And likewise with the miners, they all sold off on Friday. GDX, it looks very similar. I took a little starter short, not a very big position. What I was waiting for is a break of this flag to add to that. And then we'll get that continued move down to about 33.50, 33.40, somewhere right in there. Let me go to the daily on that one. Yeah, see, that's your top reaction there. So I'd put good probability if we can break this flag that we're kind of doing, that you're going to head down there and at least hit that. Probably lower too, and that would give us a move of, and it's a 5% drop or so. But I think that's definitely in the cards if you can break the flag. Otherwise, if they want to gap it back up and do a little false breakdown, then you're probably going to run back up for another move high, another move up. So I was just waiting for this flag to break before kind of loading up on it. Okay, that's that one. Wheat looks okay. I saw it was up on Friday, and not up huge, but when I look at these commodities, some were selling off, but it looks like the grains are starting to catch a bid. Here's corn was up, wheat's up. I don't know what soybeans were doing. SOYB. Let me check that one. Kind of flat there. Wheat and corn are the two that really like to trade. Their grains. It's okay. Bullish falling wedge. All right, big bullish falling wedge. Big wedge there. Bullish divergence, huge divergence. To me, this is setting us up. Okay, so you take the widest part of the wedge. Let me see if I can mark that. I'm off. Right in there. You take the widest part of the wedge, which as of right now, it's basically that. And then that's your measured target. All right, depending on when you break out, but it's setting us up for a move, up here, all the way up to $10. Anywhere from $9 to $10. There's good resistance right up there. So $9.50-ish. And that's a move of about 37%. All right, so I like it, but we don't have that breakout of the bearish falling wedge yet. So we're still kind of wedging out. But you can see it's compressing, so we're really close to where we should start to break, and I believe it's to the upside. And then another thing, you can check the futures ZW, and they're a little messier. I'd have to probably clean my chart up. It's kind of chopping through. Looks like it's building a base of support for sure. Still have that divergence. So I'm looking for upside, guys. I think it's going to come. By the time you get it, if you get the big move up, it's too late to get long, at least. So ADI. Okay, let's see here. What does this one do? Semiconductors. Well, I've already covered the semiconductors, so I'm sure there's their negative divergence and no trend there. Maybe that. I don't know. Looks like just SOXX, you know, once that breaks, these are going to start breaking too. Okay, what else do we got? Let's see here. SASOL? I have no idea what that is. Never heard of that one. Kind of a penny stock here. Not a lot of liquidity and volume. Downtrend. That's it. I think you're in a downtrend. I think that downtrend's likely to continue. Kind of middle of the range right now, but that's what I would go with, is this, you know, downtrend. No divergence is telling me that trend is changed or about to change, and that's it. I don't know what the next big catalyst is. Maybe tech earnings. I don't know, you know. Someone asked me what I think the next big catalyst is. It's, yeah, the Fed or tech earnings. The market's the market's been trading on the Fed forever, so it's probably the Fed, I guess. But THS. Another defensive stock. These have been relatively strong. I mean, it's bearish rising wedge. I mean, yeah, you do have divergence that's been building for a while. What I would say is, all right, there's your divergence, massive divergence. You need to see a break of the trend to initiate a sell signal. Until then, you're kind of in this bearish rising wedge. So that might continue for another month and then break. I would just set an alert. You break that trend line, you're probably going to go, you know, start to roll over. Just let me know, you know, in the videos, bring them back, you know, leave a comment. Hey, this broke its wedge or something. I'll start pointing out some key levels of support. You can kind of mark it out. There's a level right in here. All right, Tesla. All right, Tesla, guys, is, look, and this is another one of those tech stocks. I mean, look, I've pointed out this level. I'm like, okay, we're at resistance. We're at resistance. It held. We're at resistance. It held. We gapped above it. They sold it right down below. Resistance, resistance. Nothing changed. That's it. So I could see it popping up to the 200 and doing a back test. I could see that for sure, because if that happened, you'd be rallying into the 200 on a back test of this trend line here with negative divergence. It would offer a very objective area to short. So from my perspective, this stock is sell the rip. All right. When I say something sell the rip, that means I want to short now at resistance. All right. I'm not looking to buy the dip. I'm looking to sell the rip, because stocks, as they fall, there will be rips. There will be up moves. So I'm looking to sell the rip. If it rips, I want to short that right there. All right. For the next move down. And then it'll rip. I want to short it at resistance. All right. I don't want to short the drop. I want to short the rip. All right, I want to short that. I don't want to short this, but most people, they don't want to short the rip, all right? They don't like to take a position when something's moving up. They don't want to go against the price action, essentially. They only want to short when it does this. Well, I want to do the opposite. All right. Someone says, looks like GWW is a good short. Let me take a look. And guys, I've got about maybe 5 more minutes, so sorry if I can't get to you. I do apologize. GWW, we got distribution services. Okay. So there's my bullish trend on the daily chart. I've got a kind of a bullish channel, I believe. Right in the middle of the channel. Yeah, you have divergence here. So that's your last divergent high. We still have this bullish channel. I would say good probability you're coming down to the bottom of the channel, but I don't want to short mid-range. All right, that's no man's land. I don't want to short here. I want to short at resistance, or I want to short on a break of support. Middle of the range, not interested. So that's all I have on that one. Vale, that's our steel. That's an inflation trade, or iron, or yeah, steel. So that looks like a breakout there. No real divergence that I saw down here at the low. Breakout, I don't know. Looks bullish to me, really. If I had to pick a direction, I would say probably bullish. Might come in and do a back test, maybe not, but that looks bullish. It's not my favorite because I don't have like a bullish divergence, you know. The divergences I look for because it's up. Those are the traps. What, you know, you'll start to get divergence and kind of creep down and make lower lows, and you're trapping the people who aren't paying attention in that kind of technical setup, and then it goes the other way, and all of a sudden those people become bag holders. You really want those bag holders. I mean, this gap up does help because if you were shorting, let's see, I would have liked to see a divergent low right there, and I just don't have that. But still, the people that were shorting here, it gapped up. It's kind of trapped them. So I would say up. Microsoft, I covered that one. I don't have any thoughts on the bank earnings. The only thing is that I think I know JP Morgan gapped right to my resistance level. Here's XLF. Look, support, and it's resistance. So we're just at resistance. I suspect it doesn't go much beyond here. Maybe it can grind around up here for a little while, but I suspect it's not going to continue to rally much above here. Maybe run up and hit the 200, but likely going to fail there. And then JP Morgan, you know, they ripped that thing up on earnings. That did actually close a little bit above what I had my resistance line at, which was about 138.14. So we'll keep an eye on that one. All right. It's not enough to say it's a definitive breakout. I suspect the opens on Monday down right here at 138 or maybe lower, and then it could just hold up there for a little while. I don't have a real big opinion on the financials right now. All right, 2 more, then I have to wrap. So, all right, this person's been begging me to cover net, so I'm going to do that one for him. I've been leaving comments about it and stuff, so net. This is a tech stock. It is a growth stock, so keep that in mind. If Q's rolls over, this thing's going to roll over too. I don't really have any divergence that are kind of telling me anything. I've got this uptrend line here. It's about there, I guess. No real divergence. So, yeah, nothing to short. Looks like, you know, kind of working its way up. Uptrending. And big resistance right overhead at this level right there. 76.50. Okay. That's it. Earnings coming up very soon, so nothing's really speaking to me on that one in terms of like a short. So, you know, I don't know. I don't know if I'd want to hold it into earnings, but everybody does their own thing. One more, guys, and then I'm going to wrap up. Let me just kind of scan around, see if there's anything that looks good. Let me just double check something. Right at resistance on that one, guy. So probably going to get a little pullback. And let's see here. Crowd. Yeah, crowd maybe for a short. I did glance at that. I don't think it's broke its trend line. Oh, yeah. Maybe. Might be a short. There's your negative divergence. See, so this was one I talked about as a long, right? We broke right here. We had the bullish divergence. I said, oh, there's the buy signal. And from there, it went on to rally, what, 35%. I think it's gone full circle now. You have negative divergence here, okay, right there. So divergent high, divergent high. And look, you had the divergent high there, then you got a breakdown, which kind of looks like a sell signal. And then last week, just a rally back test. And look where they closed that thing, right there on the trend line. All right, so that's resistance, it looks like. If you get a gap down or a move down, then yeah, I think that's your confirmation you'd be looking for the start of a short, all right? Otherwise, maybe they're going to gap it up and this is a false breakdown. I don't know if that's a false breakdown yet. I think it is the breakdown and a back test. That's how I would be treating it with the divergences. If you see, it was definitely objective to short on Friday. If and if it confirms and you start to see more selling, I would probably go with that route and say, okay, we're going to roll over now and support down here. Here's some support right in there, and those are my two levels that I would go with. Maybe right there. There's probably a third level right there. Doesn't look like a huge reaction level, but 3 levels. All right, 125-ish, 118.30-ish, 107 or 107.50-ish, and then the lows. All right. Okay, guys, that's all I have. So hopefully you're finding value. Drop me a thumbs up on your way out. Appreciate it. And I will catch you guys. No video on Monday, but I will get out I have to go to a funeral this weekend, so no video, but I will get a video out on Tuesday, and I'll be commenting in the private member group in the morning as I see things kind of start to open up and see how the market, what it wants to do, and find any trade ideas I can find. So I'll get those out to you guys. Catch you on the next one. All right, take care.